When you start trading options, it's so easy to get overwhelmed by all the information that is out there. However, I really truly believe that options have a huge advantage that nothing else has. And regardless if it's stock trading, regardless if it's Forex, options trading have a huge advantage over anything else. And that's why in this video, I wanted to cover that big advantage and to make you realize what is the opportunity that is right in front of you. And if at any point you find this video interesting and you actually like it, please consider subscribing to my channel and liking this video. That really be the best support you can give me, and I really appreciate it. And I'm gonna break the ice right now. The major advantage that options trading have over anything else, whether it's stock trading, whether it's Forex, or regardless of whatever you want to trade, options trading have a huge flexibility over everything else. Regardless if it's in the strategies, the products traded, I mean, you have so much flexibility when you trade options. And for example, if you were willing to buy Tesla shares right now, you would have to pay the current price, meaning I think Tesla is around $334 per share. If you were willing to buy Tesla shares, you would have to pay per share $334. And options traders can have a complete different approach when they're willing to, for example, to trade Tesla. And to make you fully understand this concept of flexibility, let's imagine that we have two people. One is an option trader and the other one is a stock trader, meaning he's only going to buy and sell shares at the current price. Well, if they both wanted to actually trade Tesla, the only choice the stock trader has is to whether buy or sell shares at the last price, so $334 per share. But for the option trader, there's so much more that he can do. He could, for example, if he was willing to own the shares at some point, sell puts on Tesla at a very far strike price and collect a credit for that, meaning that he would play the role of an insurance company, selling an insurance contract and collecting a credit for that. Let's say, for example, that the option trader is willing to sell the 318 put, he would collect for that $575, meaning that at expiration, if Tesla stays above 318, he would collect the max profit of $575. But if the stock price was going to fall below 318, he would after that become the owner of 100 shares at a 318 share price. Meaning that it makes much more sense when you start getting into options to actually start selling cash secured puts. And if you don't know what a cash secured put is, I've talked about it in my real strategy video that you can just check up here. It makes much more sense to sell puts, for example, on stocks that you'd like to own, because in that example of Tesla, if the stock price stays above 318, the option trader makes a profit, meaning that he's literally being paid to be patient. And even if the stock crashes and falls below 318, well, he would actually own shares at a very good share price compared to the stock trader, where the only possibility that the stock trader has is to trade Tesla shares at the last price, meaning at 334. And that's really the only thing that he can do compared to the options trader that has much more flexibility. And this example for the option trader selling cash secured puts is only a fraction of what can actually be done with options trading. And something that completely blew my mind when I got into options trading and I started getting interested in all the strategies that I could use is that you do not only have to whether be bullish or bearish on a stock, you can also bet that the stock is going to stay within a certain zone, for example. Or you could bet that the price is not going to stay within a certain zone, and if it goes either way, well, you could make money on that. And that's really the crazy thing about options, is that when you combine different contracts of whether buying or selling options, you can create all those different profit zones, and that really gives you a major advantage over stock traders, because now you have much more flexibility in the strategies that you can use, and you can really take advantage of things such as volatility and time decay, meaning that as time goes, options are going to lose value and you can actually take advantage of this. But what's even crazier about the fact that you can use different strategies, meaning that you can be bullish, you can be bearish, you can also bet that the stock price is going to stay within a certain zone. On top of all those crazy strategies that already give you so much flexibility, you also have a huge flexibility in terms of probabilities, meaning that you can really choose how risky you want your trade to be. If you wanted to have a trade that has, for example, 99% probability of profit, that's completely possible to build a trade that has 99% probability of profit. On the other end, if you wanted to have a trade that has, for example, 45% probability of profit, you can actually build this type of trade and use those strategies to make them have the probability that you want them to have. And I know it might sound a bit complicated, but stick with me, it's gonna make a ton of sense after. For example, if we were using a strategy that is called a short strangle, meaning that we bet that the price is going to stay within a certain range, you can choose how wide you want your short strangle to be, meaning that you can choose how likely it is that the price is going to stay within a certain range by making your profit zone wider or tighter. And you can actually check the probabilities as you're before moving the strategy, meaning that you can really pinpoint exactly the probability that you want your trade to have. If you wanted to create a trade, for example, using a short strangle that has a probability of 70%, well, you can actually do that and your trade has 70% probability of profit. But if you wanted to have less risk, for example, and you really want the price to stay within a certain range and have a very high probability of profit, you could widen your profit zone and have a very high probability of profit. And the only thing to understand is that it all works in a risk-reward balance, meaning that the higher your probability of profits, the less money you're going to make. And the smaller the probability of profit, the bigger the amount that you're going to make. And it really makes sense because there is no free lunch, of course. And if you want to earn more money, you're gonna have to give up some probabilities of profit. And now you can start understanding why options trading has a huge advantage over everything else, because on top of having the advantage of choosing the strategy that you want, meaning that you do not only have to be bullish or bearish, you can also be neutral on the trade, well, you can also choose the probabilities that you want your trade to have. And that's a really powerful thing because you can really adjust depending on your risk level, how often you want to be right and how much money you're going to earn. And options are used by a lot of investors, and Warren Buffett is no exception. He's been selling a lot of options for years and years and playing the role of that insurance company. And you can actually find the information in his 2008 annual letter to shareholders, where he explains how he sold a lot of options on major indexes. And for him, that's a really good strategy because of course we all know how Warren Buffett is so rich, meaning that he doesn't really have a risk of becoming insolvent. And even if the indexes that he has sold options on were going to fall dramatically, he would be assigned and he would now have a lot of shares at a very good price. And even though he very often criticizes investment products such as options, he actually uses them a lot as an investment strategy. And to give you an idea of how much options he has sold, well, Warren Buffett in his 2008 annual letter to shareholders said that the amount and the total notional value of those options that he sold, well, is equaling $37 billion. So you can see that it's not a small trade. I mean, of course, that's Warren Buffett, and when he sells options, that's 37 billion, something that I probably won't never be able to do. But it's just to show you that everyone uses options, and it really gives you so much flexibility that it's really worth at least trying and at least understanding what options are about. And when I've been telling you here about the strategies, the probabilities, they're really a fraction of what can actually be done in terms of strategies and how you want your trade to look like. Because there are plenty of strategies, whether it's credit spreads, whether it's debit spreads, whether it's neutral trades. I mean, you have a lot of combinations possible. And on top of that, with the war to reduce commissions by brokers, meaning that over 2019 and since Robinhood basically has been introduced to the brokerage market, brokers have tried to lower the commissions so as to attract investors. But in that race to lower commissions, well, a lot of new investors and smaller investors are now able to trade options at a lower cost as the commissions have been reduced dramatically. And especially in 2019, where a lot of brokers such as Schwab, TD, and Ameritrade reduced their commissions like crazy. So it's been the start of a great opportunity for smaller investors who are willing to trade options, and now there is no reason for at least not trying to understand what options are about. So I hope this video made sense and you understand a bit more why options trading is so much better than stock trading in general, and there's so much flexibility that you can have, and I think that's the major advantage that options trading have. And if you understand how to use that flexibility at your advantage, you're really gonna start enjoying options trading. And to give you a grasp of the type of strategies that you can use when trading options, I really recommend you to watch my wheel video strategy, where you can actually see how the wheel strategy works and how you could implement it yourself for your own trading. I hope you enjoyed this video and it made sense for you, and if you have any questions, please don't hesitate to comment them below. I'll happily answer them. I wish you all the best and see you in the next video.